It is 8:32 a.m. Pacific Daylight Time. It's the 12th day of May, 2026. This is episode 1319 of Bitcoin and Anthropic is going to be first up today. Even Anthropic's got a slight problem with, what do we call them? Tokenized equities. They're giving a pretty stern warning to people as to be careful what you buy when it comes to Anthropic stock and where you buy it. So now even the head honchos of these companies are starting to look at this tokenization of everything and kind of taking a step back from it. Again, that's going to be first up here on the Bitcoin and podcast with me, your host, David Bennett, bringing you all the news that you can use about Bitcoin and macro from around the world. And that includes the Clarity Act draft. They're marking it up, and there seems to be some language in it that we're going to want to read. Bitfarms has reported a massive first quarter loss because they're transitioning to AI, and maybe it's not enough. Maybe they should have held on to a little bit of their Bitcoin mining. You never know. And then on to Germany, where the elimination of digital asset tax exemption is on the table. Then with market reports, CPI numbers came out. We'll tell you all about that stuff. And then I'm going to have a rather long read on power projection and Bitcoin. And it's going to come out of Bitcoin Magazine. And it's going to be long enough that I think it's going to take up a good section of the second half of the show. And finally, your usual end of show warning about crypto wrench attacks, but this time it's not in France. So let's get back to Anthropic. Anthropic warns against unauthorized stock exposure as token markets imply trillion-dollar valuations. Sam Reynolds writing for CoinDesk. Anthropic, the AI company behind Claude, is warning investors that tokenized products claiming to offer access to its private shares may be invalid, escalating a fight over whether restricted pre-IPO stock can be repackaged for retail traders. In an updated investor warning page, first published in February, Anthropic said any unapproved sale or transfer of its stock or any interest in its stock is void and will not be recognized on its books. Quote, "We do not permit special purpose vehicles to acquire Anthropic stock, and any transfer of shares to a special purpose vehicle are void under our transfer restrictions. Offers to invest in Anthropic's past or future financing rounds through an SPV are prohibited," the company wrote on an updated warning page. Quote, "This means that if someone purports to sell Anthropic shares without proper board approval, that transaction is invalid." It added that any third party claiming to sell Anthropic shares to the general public through direct sales, forward contracts, tokenized securities, or other mechanisms is likely either engaged in fraud or offering an investment that may have no value due to our transfer restrictions. Over the past year, several crypto exchanges have set up offerings for pre-IPO exposure to some of the hottest tech companies on the planet, like Anthropic and SpaceX and Polymarket. However, not all of the offerings are the same. Some are synthetic pre-IPO perpetuals, where no underlying shares are necessarily held, and traders are simply betting on a reference price tied to a private company's implied valuation. Those instruments may not directly violate a company's stock transfer restrictions because no shares move, but they leave users with a derivative claim rather than equity exposure. By contrast, products offering private market exposure through special purpose vehicles or SPVs or secondary market holdings such as pre-stocks, tokenized single asset offerings, or the Robinhood Ventures Fund 1 are closer to tokenized private share exposure. Pre-stocks terms of service states, and pre-stocks is the name of a company, so pre-stocks terms of service states that buyers receive no equity or shareholder rights in the underlying company, only economic exposure tied to reserve backing. However, it does not specify whether this exposure is delivered through a special purpose vehicle, leaving uncertainty around the exact structure behind its Anthropic linked tokens, which the company says may be straight up invalid. That model may be more intuitive to investors, but it also runs more directly into the restrictions private companies place on who can buy, sell, or hold interests in their stock. John Montague, a Florida-based crypto lawyer, previously told CoinDesk that private companies may challenge these structures. Quote, I think private companies may also initiate lawsuits alleging that this violates their governance documents, shareholders agreements, investor rights agreements, or bylaws. I view it as the issuer's right to control the terms of transfer, he told CoinDesk, and that was last year. Aside from unauthorized stock transfers, another headache these markets create for companies is valuation. Tokenized markets can generate eye-popping implied price tags that appear to be legitimate public price discovery, even when the underlying liquidity is relatively small. Pre-Stock's dashboard recently showed that Anthropic had an implied valuation above $1.5 trillion, that's trillion with a T, and a market valuation of around $1.37 trillion, despite the platform holding roughly $23 million in total assets. Let's read that again. Pre-Stock's dashboard showed Anthropic had an implied valuation above $1.5 trillion, despite the platform holding roughly $23 million in total assets. God, for private companies that raise capital through negotiated funding rounds rather than public markets, this creates a real narrative risk. Speculative token prices can begin to shape investor expectations and headlines about valuations beyond the company's control. So there you go. Be very, very careful with all of these things that are coming out that say that they're pre-IPO tokenized securities. At this point, Anthropic is basically saying, hey, dude, we're not authorizing this. Whatever it is that you're being sold could very well have no valuation whatsoever if you want to actually settle this out. So, be aware. Be aware, man, because I've been telling you that this whole tokenized securities, tokenized equities, tokenized everything is ripe. It's ripe for scamming. And that is going to be a big deal for the rest of this year. I mean, at one point or another, it'll probably settle down, get regulated, or whatever that has to happen for people to actually have some kind of trust in it. But right now, I wouldn't trust a single one of these instrumentations. I don't see any value in it anyway. But unless it's coming straight from Anthropic or your stockbroker or whatever it is that your Morgan Stanley guy, right? If it's not coming from them or direct from the company or in some other way that makes sense to, and I know, to legacy markets, and I know that's kind of hard to hear, it's untrustworthy. There's going to be so many people out there saying, yo, man, hey, you want some Anthropic pre-IPO stock? I got it right here in my vest pocket. Yeah, it's a scam, dude. Don't be believing that stuff. Let's move on to Senate Banking Committee. This is from Vince D'Aquino out of decrypt.co. Senate Banking Panel releases Clarity Act draft ahead of Thursday markup. Let's see what all this noise is about. The Senate Banking Committee releases draft text for the Clarity Act just past midnight Wednesday that could permanently exempt Bitcoin and shitcoin number one from federal securities law, ahead of a markup that's been scheduled for Thursday of this week. Committee Chairman Tim Scott, Subcommittee on Digital Assets Chair Cynthia Lummis, and Senator Thom Tillis recently released the text after months of bipartisan negotiation that included a last-minute stablecoin yield compromise and a deal on developer protections. The bill reflects serious good faith work across the committee, Scott said in a joint statement, adding, it delivers the certainty, safeguards, and accountability Americans deserve. Lummis said the text represented nearly a year of bipartisan blood, sweat, and tears. Wyoming led the way, and Washington is just now catching up, she added. The bill stalled in January after Coinbase pulled its support over stablecoin yield restrictions, delaying a committee vote that had already been scheduled. Tillis and Senator Angela Alsobrooks later brokered a yield compromise. The committee vote on Thursday, that's this Thursday, would advance the bill out of the committee, though it still needs Democratic support to pass the full Senate. A key provision in the draft bill contains language that would bar the United States Securities and Exchange Commission from classifying any token that served as the principal asset of a U.S.-listed spot exchange-traded product as of January the 1st, 2026, as a security. Notably, Bitcoin, and I'll say it, Ethereum, had spot ETFs trading on U.S. exchanges by that date. And I'm pretty sure that none of the other shitcoins did. Ethereum seems to be the only shitcoin that might be able to escape that, which means we're going to have to live with this dog and pony show forever. Anyway, Section 105 of the draft also bars the SEC from classifying a digital asset as a security if a U.S. court issued a non-appealable judgment before enactment finding it was not. Both provisions together mean the agency could not revisit the legal status of Bitcoin or shitcoin number one regardless of future enforcement priorities. Meanwhile, Section 102 of the draft bill also creates a certification process under which a token issuer can submit evidence to the SEC that their token is not a security. The filing then becomes legally effective if the agency does not object within 60 days. Combined with the Section 105 ETF cutoff, those two provisions together significantly constrain how and when the SEC can assert jurisdiction over digital assets. The later provision creates a silence equals safe harbor regime where SEC non-response effectively grants regulatory legitimacy without full substantive review, Dominic John, analyst at Zeus Research, told Decrypt. This risks a scenario where speed supersedes scrutiny and shifts the burden from issuer accountability to weak long-term enforcement and investor protection safeguards, John added. Anchoring non-security status to a fixed date prioritizes market maturity over reality, John said, warning that date-driven designation could grant permanent exemption from investor protection standards regardless of how the asset evolves. The yield compromise resolves one of the remaining open questions that was given institutional participants reason to wait, Louis Bellet, co-founder of decentralized clearing infrastructure firm Yellow Network, told Decrypt. Market makers and institutional flow desks have been operating in a holding pattern on their on-chain strategies precisely because the regulatory perimeter has been undefined. Bellet warned the 60-day window is only as strong as the commission capacity to deploy it, with borderline cases at risk of slipping through. The ETF cutoff, he added, conflates market acceptance with legal status, creating a two-tier system tied to which assets happen to have ETFs approved before a specific date. So that's the end of the article, and it looks to me like basically speaking, the SEC is going to let, the Clarity Act is going to let Bitcoin and Ethereum fully through the gates, and everything else is going to be gate kept. If you're in a shitcoin, even if you're in Ethereum, get out. It's going to be a mire of crap. Now, this all depends on whether or not Clarity Act actually passes. There's a lot of hope in the Congress. There's a lot of Congress people that are saying that they've got high hopes that they're going to get this shit done. But time is ticking, man. I mean, like a few months before November elections, Congress is essentially just going to be like not at home. They're going to be working on everything else for themselves for their reelection campaign, their friends' reelection campaigns, whatever. They're not really going to be focused on legislation. This is one of the problems with the 2-year election cycle that we have here in the United States. It's every 2 years. At one point or another, some sack of senators is coming up for reelection, even though they have a 6-year term. And representatives only have a 2-year term, so the House of Representatives is always in a 2-year election cycle. And this really sucks. I hate this. This is one of the other reasons why term limits should actually be in place, so that if you're you get maybe one shot as a representative to go through a reelection process, you get 2 terms. And that's it. It won't do away with the 2-year election cycle, but if you were if you're in the House of Representatives and you've already done your bit for king and country and you're on your second term, you don't have to worry about running for reelection at the end of your second term, so you can just work through it. That would just by itself is a good reason to have term limits. I don't think we'll ever get them, but man, it would be nice. Moving on to The Block and Brian Danga, former Bitcoin miner Bitfarms reports $145 million Q1 net loss amid Keel rebrand and AI transition. Keel Infrastructure Corporation reported the $145 million net loss for the first quarter of 2026 as it shifted resources from Bitcoin mining toward high-performance compute and artificial intelligence infrastructure. The New York-based entity became the ultimate parent company of Bitfarms Limited on April the 1st. As part of the deal, Bitfarms rebranded to Keel Infrastructure, a move the company said in a Monday statement followed its re-domiciliation to the United States and strategic shift. According to the statement, the loss was driven by a $41 million non-cash loss from charges in the fair value of digital assets and a $22 million loss related to the extinguishment of its Macquarie credit facility. So they paid off a big-ass debt. Operating loss, however, was $98 million compared with $35 million in the same quarter a year earlier, according to the firm. General and administrative expenses rose to $27 million, up from $18 million just 1 year earlier. The company attributed the increase to professional services tied to the U.S. re-domiciliation, gap conversion, and the Paso Pay sale that closed April the 21st. Keel said the results reflect ongoing restructuring efforts, including its exit from Latin America and a continued reduction in its Bitcoin holdings. It sold 269 Bitcoin between January 1st and May the 8th for $20 million in proceeds as part of that process. CEO Brian Gagnon stated that the rebranding marks the completion of a strategic transformation focused on supply-constrained HPC/AI markets in North America. Gagnon noted that the company is entering 2026 with a vision, a vision of advancing these primary sites through lease execution, and per the statement, Keel's liquidity stood at approximately $533 million as of May the 8th. This balance comprises $336 million in unrestricted cash and 197 million in unencumbered Bitcoin. Shares of Keel Infrastructure rose 8.3% to close at $4.30 on May the 11th, according to Block's crypto stocks page. So they took a hefty loss. They did pay off some debt, but their stock rose 8.3%. However, I mean, their operating costs are rising and their revenue seems to be falling. And the one thing that they changed is they seem to have gotten out of Bitcoin mining altogether to go all in AI. And honestly, I don't think that's really going to work as well as these people think it's going to work. Not because AI is going away, but I think something like Bitfarms, you're small enough that you can get eaten up pretty good. And they may not care. They may just want to get bought out. Who knows? But still, even if they didn't, right? Bitfarms is still small enough that they may not just be able to compete with some of the bigger players that are out there. And there are some massive freaking players. And a lot of the massive ones that began as Bitcoin miners still have a very large component of Bitcoin mining in the background. They're just expanding their revenue base, which is not a terrible idea. But when you cut one revenue base to go all in on another, you're taking a pretty big chance, and it looks like this one kind of came back to bite them in the ass. Well, maybe they need some maple syrup to sweeten the deal, and you can get yours from Maple Trade, and he still has some maple syrup in stock, according to his takemysats.com page. For 39,840 sats, you too can get some maple syrup. And, let me tell you just a little bit about Maple Trade's maple syrup. You can discover Maple Trade by BuysNerds, that's his Twitter handle, and his handle on Nostr. It's exquisite handmade maple syrup directly from his hands to yours. So, the way that he does this is he has his own maple trees. He taps those maple trees with his own hands. He lugs all the fluid, all the maple sap, away from those trees by hand and pours it into an old school evaporator that's oak. Well, it's probably it's fired by wood. I don't think it's oak. It's most likely like other maple trimmings. But he evaporates it down into the best maple syrup that I've ever had, and I have had his maple syrup. And you're lucky that he still seems to have some left. In fact, he's got 1 quart of maple syrup left. You will have to go to the show notes to get to his takemysats.com storefront, all right? Because otherwise I can't really read it to you. It's kind of illegible. But that is a URL. It's clickable. It's in my show notes. You can just click it. Go to Maple Trade Maple Syrup on takemysats.com, buy one, and make sure that you use code Bitcoin because that will at least tell him where he made the sale. And this is the Circle P. It's where I bring plebs just like you that have goods and services to plebs just like you who want to buy those goods and services, but you will be buying it in Bitcoin because if you're not selling it in Bitcoin, you're not in the Circle P. This is the only way that Maple Trade will know that I made a sale for him is if you use code Bitcoin and then he'll boost me or he'll dump some sats on me through my Nostr account or my Nostr handle. And that's the way the Circle P works. There's no contracts. There's just basically a digital handshake that, hey, if I make a sale for you, you figure out what that sale was worth to you as the vendor, and then you shoot me sats on the other side. But that's why you got to use Bitcoin as the coupon code. Otherwise, Maple Trade won't know how he made the sale. All right, moving on to Germany. Klingbeil, I guess that's this guy's name, Klingbeil, wants to eliminate digital asset tax exemptions in 2027. This is out of Atlas 21. Germany is preparing to dismantle one of Europe's most favorable tax regimes for cryptocurrencies. Vice Chancellor and Finance Minister Lars Klingbeil has finalized a plan to abolish the tax exemption currently guaranteed to investors who hold digital assets for at least 12 months. The measure is included in the, I cannot pronounce this German word, Urquhart postulus, whatever, of the 2027 federal budget and is expected to be approved by the cabinet during the week. Under current rules set out in Section 23 of the German Income Tax Act, cryptocurrencies are classified as private assets. Anyone who holds Bitcoin or other tokens for more than 1 year pays no tax on the sale. Under the Klingbeil plan, crypto would be treated on a par with stocks and funds, with capital gains tax at a flat rate of 25%, plus the solidarity surcharge and, where applicable, church tax, regardless of the holding period. The measure aims to close a 98 billion euro deficit in the 2027 budget, which also includes cuts to healthcare spending, welfare, and pensions, as well as new levies on alcohol, tobacco, sugar, and plastic. This is not an unprecedented attempt. As reported in April 2025, the SPD had already put forward the same proposal during coalition negotiations, calling for the exemption period to be eliminated and the flat tax on private capital income to be raised to 30%. The CDU/CSU had blocked the initiative, which was excluded from the May 2025 coalition agreement that brought the Merz government to power. Klingbeil, who leads the SPD and now serves as finance minister, has reintroduced the measure in a different guise, no longer as a standalone tax increase, but as a component of a broader budget package. This marks the fourth attempt to eliminate the exemption in 18 months after the 3 previous ones had failed. The industry has responded with firm opposition. The Bitcoin Bundesverband, Germany's leading industry association, has called the move an obvious political trick, arguing that the reform amounts to a disguised tax hike in direct contradiction with the relief promises contained in the coalition agreement. Constitutional law experts have raised doubts about the measure's legal soundness, applying stricter rules exclusively to crypto while maintaining favorable treatment for comparable private assets could be challenged on the basis of the equity principle under German law. Eric Demuth, co-founder of Bitpanda, called the plan an extremely stupid decision, citing Austria's experience, because in 2022, Vienna abolished a similar exemption, introducing a flat tax of 27.5% on crypto capital gains, regardless of the holding period. And according to Demuth, the measure produced more bureaucracy than revenue. No formal bill has yet been submitted to the Bundestag, and it remains uncertain whether protections will be introduced for assets already held. All right, so that's the end of the article, but let's go back up here where it says, Klingbeil, who leads the SPD and now serves as finance minister, has reintroduced the measure in a different guise, no longer as a standalone tax increase, but as a component of a broader budget package. This marks the fourth attempt to eliminate the exemption in 18 months after the 3 previous ones have failed. What I'm getting at here, why I want to reiterate this, is that they will never stop. There's no, it's almost as if there's no reason to be happy at any given time that a bad law gets blocked, because they're just going to reintroduce it. And they'll keep doing it with no ramifications whatsoever. There's literally no cost to these people to continuously reintroduce a law in different language or under different guises, like the article says, until it finally passes. Now, think of it this way. What if this was a situation? What if for every single law that you either write, co-sponsor, or sign your name to, and this would be, in the United States, but also it would be nice if this was kind of adopted more generally, but that you've got to pay Congress for that real money out of your campaign contributions. You literally would have to pay to pass a law. unless you actually get the law passed, right? Then you're off the hook. But if you try to pass a law or sign your name to something like that and it fails, you get one free pass. Okay, you tried it. Everybody thought it was a bad law. Nah, you don't have to pay for that one. You don't have to pay for it if the law passes. But if you try to reintroduce something that has already failed and it fails again, you got to pay out of your campaign contributions, out of your re-election campaign fund. If we're not going to have, and we probably won't ever have, term limits, and you're going to continuously run for Congress or whatever it is, if you try to pass that law, if the second time and it fails, you got to pay out of your campaign contribution. What would that do? I would really like to see something like that happen as well. But meanwhile, we got numbers to run. Before we get into commodities and whatnot, inflation numbers came in at 5:30 a.m. my time this morning. And in general, April inflation came in much hotter than expected. And here's the CPI data. Prices rose 0.6% month over month and 3.8% year over year in April, according to the latest consumer price index. Core CPI, which excludes food and energy costs, rose 0.4% for the month and 2.8% yearly. So what does that mean? It means do not look for the Federal Reserve to cut rates at their next meeting, because employment came in pretty good unless they revise it way down. They like the employment non-farm payrolls came in at 115,000 jobs for last month. So from that standpoint, that looked good. These numbers don't look good. 3.8% increase year over year for prices is 1.8% above the 2% inflation mark that the Federal Reserve has laid out. This means that there's not going to be cheaper money by the end of the next Fed meeting when they tell us what it is they're going to do, because they're probably going to do nothing again. So just understand that and be prepared. And it's why we got the numbers that we've got today. Let's start out with energy, which is more driven by what's going on in Iran. Brent North Sea is up another 3.29% to 107.64 a barrel, and West Texas Intermediate is up 3.5 to 101.53. Natural gas is acting as the hedge today. It is down over 3 points to $2.81 per thousand, and gasoline is up 2.5 points to $3.69 a gallon. Murban crude is up over 2 points to 105 and 8 dimes. Metals are mostly down today. Palladium down 2 1/3. Gold is down 1.15% to 4,674 and 4 dimes. Platinum is down almost a half, and silver is down 1 1/4 to 84.86. And copper is actually the only one that's up today, 1.15% into the atmosphere. Biggest loser today is chocolate, 2.5% to the downside. Biggest winner is wheat, 2.8% to the upside. Meanwhile, live cattle down 1/3, lean hogs down 1 1/3, and feeder cattle down 2/3. Now here's the indices of equities, which reflect that the people on Wall Street really didn't react well to the CPI numbers. S&P is down almost a full point. NASDAQ is down 2 points. The Dow is down only 1/3 of a point, and the S&P Mini is down 1.61%. And Bitcoin struggling too at $80,310, still a $1.61 trillion market cap, and we can purchase 17.2 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,028,198.03 of, an average fees per block 0.02. Bitcoin taken in fees on a per block basis. It's about 42 blocks carrying 103,000 unconfirmed transactions waiting to clear at high priority rates of 4 sats per vbyte. Low priority will get you in at 1. Hash rate has fallen 990 exahashes per second, but that's still more security than I know what to do with for Bitcoin. Now, and I got to get back up here. Come on. General Stanley's Army, yesterday's episode of Bitcoin and INPC with 5,555 sats. Thank you, sir. It says, been trying to boost on Podverse and getting errors, so zapping here. Cheers. I'm sorry that you were having problems there on Podverse. That's distressing. Pies with 2100 says, had to come back out of my digital fasting to boost my man Dave. I heard y'all were being cheap and showing Dave no love. Don't be cheap, y'all. Yeah, I concur, Pies. Thank you. I appreciate you getting in my corner for that. Jay with 2100 sats says, thank you, sir. There is at least one woman listening to this show, and she's been trying to tell you as much in the boost for a while now. Jay, I got 3 brain cells left. And when I rub them together to make a spark, it doesn't always exactly work. So I do appreciate you letting me know, and I hope you got my Nostr note that I sent you yesterday. Terron with 2026 sat says, nothing will happen in Australia because it started as a prison camp and still is a prison camp. No freedom, no constitution, no Bill of Rights, just morally crippled, broken society governed by kleptocracy. Terron, I hate it. I hate that. You know, when I was a kid, a lot of us in the United States looked to Australia as a bunch of badasses. And ever since fucking COVID, dude, it's just been like, well, maybe not. You know, at least in the government, but I just wish you guys had never gotten disarmed. I really do. That's the one thing that the United States still has going for it, is that we're all armed to the teeth. Jub with 1,123 sats says, I don't care who buys, sells, or moves what. My DCA goes through automatically. More stress-free sats for me every day. I hear that. Psyduck is back. I haven't seen Psyduck in a while. With 790 sats, Psyduck says, Psyduck. Jason High with 250 says, here's a boost. I appreciate that, sir. Nick Dose with 210 says, cheers. Right back at you. And Nostr Gang with a short row of sticks says, I am a woman and I listen to this show. Thank you, Nostr Gang. I was thinking that you were a woman, but I wasn't exactly quite sure. I'm glad that you completely and totally cleared that up for me. However, next week I will probably forget because, as I was telling Jay, I've got 3 brain cells left. Psychros with 100 sats says, it seems very strange that banks are worrying about savings accounts or that anyone takes them seriously. Money market funds took most of their lunch decades ago at this point. If anything, they're the ones who should complain, though I guess there is still a connection. They're the ones that should complain, and I'm assuming that he means money market funds. I think he's right, except money market funds, I think, are probably more agile in being able to get into allowing, being able to hold custody of something like Bitcoin than banks are right now. Plus, you know, they were moving, like Psychro said, they moved pretty fast, you know, back in the late 80s and getting into the 90s and the 2000s. Money markets did come up and they were eating banks' lunch, and that's a good reminder. So thank you for that, Psychros. That's the weather report. Welcome to part 2 of the news that you can use. What does Bitcoin power projection mean to the United States military? Juan Galt, Bitcoin Magazine. On April 21st and 22nd, 2026, during a Senate Armed Services Committee, Admiral Samuel Paparo of U.S. Indo-Pacific Command made comments on Bitcoin's utility in cybersecurity for the country's military, calling it a valuable computer science tool as power projection, and disclosing that Incopacom is running a Bitcoin node in their experiments with the protocol. The comments made by Incopacom commander came just days after the Islamic Republic of Iran demanded payment in Bitcoin for safe passage across the Strait of Hormuz. The mention of power projection echoed the work of a famous and controversial Bitcoiner, Jason Lowery, author of Soft War, a novel theory on power projection, MIT fellow and special assistant to the commander of Indopacom. In his work, which involved an MIT thesis and book expanding on his work, Lowery discussed the cybersecurity value of Bitcoin and its unique ability to deliver power projection in cyberspace, a landscape of national security and military operations that otherwise lacks traditional deterrence options. The book gained significant popularity and earned Lowery both fans and critics across the Bitcoin industry, but was later taken down from distribution by Lowery at the request of his superiors, an event that suggested to some that the book might have something important enough that the U.S. military wants to keep quiet. But what is this unique value that Bitcoin brings to military matters, and what does power projection in this context actually mean? According to Department of Defense's 2002 Dictionary of Military and Associated Terms, power projection is, quote, the ability of a nation to apply all or some of its elements of national power, political, economic, informational, or military, to rapidly and effectively deploy and sustain forces in and from multiple dispersed locations to respond to crises, to contribute to deterrence, and to enhance regional stability, end quote. In other words, the ability of a nation to influence the behavior of other nations or political entities of interest at a range beyond its national borders. Examples can range from diplomatic to economic influence, as well as military capabilities such as long-range missiles, drones, or a, powerful navy. The word deterrence is also doing a lot of work here. The DoD defines it as, quote, the prevention from action by fear of the consequences. Deterrence is a state of mind brought about by the existence of a credible threat of unacceptable counteraction, end quote. Lowery brings Bitcoin into the world of deterrence in the physical world by presenting a particularly interesting insight that just as microchips are essentially wires moving electric power in encoded logic inside a computer's motherboard, so can the globe's electric grid be seen as a kind of macro chip, with giant wires moving large amounts of electricity from power sources across nations and throughout the world. These macro chips now also have logic gates in the form of Bitcoin miners, Lowery argues. They consume large quantities of energy, converting it into the scarce digital asset, which can be programmed via Bitcoin script. The Bitcoin macro chip could, in theory, bind cybersecurity matters to the physical world, since energy output is one of the most important and expensive resources a nation can muster. While governments can print paper money at will, summoning massive amounts of electricity to influence something like Bitcoin's proof of work competition is orders of magnitude more difficult and is the basis of Bitcoin's resilience. The most obvious and powerful demonstration of Bitcoin's embedded logic security is the invention of multi-signature Bitcoin wallets, which safeguard much of the Bitcoin wealth today. Multi-signature wallets require multiple predefined private keys to sign valid transactions before Bitcoin can be transferred, making it possible to geographically decentralize the storage of Bitcoin private keys across space and jurisdictions. Multisig challenges hackers not just to hack one key pair, but multiple across multiple locations under time constraints, since users have the advantage of legitimate access to those keys and can potentially move the Bitcoin quickly in response to a threat. Hackers must gain access to enough of the keys while also fooling alarms and safeguards, avoiding getting caught. Multisig imposes high costs on attackers and, as such, might very well fit the definition of deterrence. It may even fit the definition of power projection, as Bitcoin funds can be kept secure and available to be sent when needed anywhere in the world, thanks to Bitcoin's other networking-based censorship-resistant qualities. This differs from traditional finance and its centralized databases, since banks can freeze and confiscate assets from their rightful owners when pressured politically, as seen in cases like that of Cyprus and their 40% bail-in, or the United States confiscation of Russia's foreign treasury reserves held in European custody. But Indo-PACCOM did not explicitly talk about Bitcoin, the asset, in their comments. They seemed to think Bitcoin's proof-of-work protocol could secure data and networks external to the Bitcoin asset, but the Bitcoin script, the logic internal to the Bitcoin blockchain, only governs Bitcoin, its internal asset. For external networks to benefit from Bitcoin's powerful proof-of-work macro chip, they would have to be anchored to Bitcoin somehow. And that's where much of Lowry's thesis starts to stall out. He does, however, develop this idea further by proposing the Electro Cyberdome. In Software 2.5, Lowry argues that software system security vulnerabilities are derived from insufficient constraints on control signals sent to networked machines. An example of this might be fake login attempts that cost a website more computer resources to authenticate than they cost attackers to send. Lowry adds that such vulnerabilities, quote, can be exploited in such a way that it puts software into insecure or hazardous states. Examples of such network security exploits include, but are not limited to, email spam and comment spam. Superfluous emails and comments that flood inboxes and forums. Then there's Sybil attacks, the creation of large numbers of fake identities to manipulate systems. We have bots and troll farms that are automated or coordinated accounts used to amplify malicious activity. Weaponized misinformation, disinformation campaigns flood networks with false or manipulated information. Distributed denial of service attacks flood networks with superfluous control signals or service requests to overwhelm physical bandwidth. Forged or replayed control signals impersonate legitimate commands, orders, or data that put software into insecure, hazardous states. Lastly, systemic exploitation of administrative permissions and insider abuse, exploitation of trust-based hierarchies where high privilege accounts can be compromised or misused. Lowry suggests that other networks could defend themselves against all of these threats to some significant degree using proof-of-work protocols like Bitcoin. In the Bitcoin white paper, Satoshi Nakamoto defined Bitcoin's proof-of-work quite elegantly. Quote, "The proof-of-work involves scanning for a value that, when hashed, such as with SHA-256, the hash begins with the number of 0 bits. The average work required is exponential in the number of 0 bits required and can be verified by executing a single hash." End quote. Nakamoto specifically references Adam Back's Hashcash, a denial of service countermeasure, which was designed to make email spam costly by requiring computers sending an email to produce a proof-of-work stamp of a difficulty defined by the recipient of the email. Recipient servers would need to keep a list of stamps already used in order to prevent reuse of the same work by attackers. also known as, or rather, AKA, to prevent double spending attacks. These stamps, however, were not transferable, a quality which some cypherpunks wanted in their pursuit of digital money. Hal Finney was one such engineer who furthered the field by inventing RPOW, or reusable proof of work. RPOW essentially tokenizes proof of work stamps via a centralized server that kept track and facilitated transfers. One of Nakamoto's key innovations was decentralizing this server and its list of spent stamps in the form of the blockchain, while also defining a global difficulty algorithm that all Bitcoin miners must satisfy rather than relative difficulty targets chosen by each website at will. Lowry, in his concept of the Electro-Cyber Dome, is essentially talking about hashcash. He specifically says that servers can choose the difficulty target they see fit, and never proposes that the dome would or should use Bitcoin's SHA-256 protocol, though it is implied in his idea of the macro chip. What he does do is use Bitcoin as the principal example of such a cybersecurity network actually working at scale. Quote, "We know for sure that the electro-cyber domes can function successfully as a security protocol because this is what Bitcoin uses to secure itself and its own bits of information against systemic exploitation." Lowry goes further than defense, pointing out that as such systems gain adoption, a concept of aggression becomes possible by large miners. He writes, quote, "It should be noted that this wouldn't be a strictly defensive power projection capability. People with access to proof of power can theoretically smash through these electro-cyber dome defenses if desired. Thus, proof of power protocols are not strictly defense-only protocols, as some have argued. A top threat to people using physical cost function protocols like Bitcoin is other people using the same protocol. Hence why Nakamoto mentions the word attack 25 times in an 8-page white paper, each time referring to people running the same protocol." End quote. Lowry's software thesis can be fairly described as controversial within the Bitcoin community. Its optimistic take that large portions of military conflict could instead be settled via hash rate wars in some future has been described by Shinobi at Bitcoin Magazine as, quote, "delusional." Broadly speaking, critics reject the idea that data or networks external to Bitcoin can be secured in any way with Bitcoin's technology stack, be it its proof of work, its blockchain, or its native asset. Jameson Lopp did a multi-part review of Lowry's thesis and book, praising many aspects of the thesis, but ultimately dismissing its conclusion, saying that, quote, "Software falls short on acting as a blueprint for how we should build the future." The most obvious question to me is whether using SHA-256 proof of work to gatekeep access to networks outside of Bitcoin makes sense in the first place, or if it could even be considered using Bitcoin. If the Electro-Cyber Dome is not demanding a high enough proof of work difficulty to mine any Bitcoin, if it does not use Bitcoin's target difficulty, its asset, or its blockchain, then is it using Bitcoin? Furthermore, given that China has the bulk of the ASIC manufacturing industry for Bitcoin mining, would IndoPACCOM really want to secure its cyber networks with algorithms that China mass produces chips to brute force? That seems like an awkward decision to make at best, and is more likely to lead them to consider alternative proof of work algorithms. But at that point, they certainly would not be using Bitcoin and would lose the macro chip argument. It would instead be using classic hashcash, and maybe that's the lesson in this story. Lowry's affinity with Bitcoin might be more of a marketing strategy and a shout out to an industry that inspired him, rather than the actual tool that IndoPACCOM might end up using. But there's a happy middle ground. In the gap between theory, implementation, and criticisms of software style ideas, there exist some projects that serve as young but curious examples of how Bitcoin can secure more than just money. Simple Proof, an open timestamps based Bitcoin notary of sorts, has been using the blockchain to record hashes of data, demonstrating that a certain version existed at a certain time. This very narrow use of Bitcoin as a time-stamping server helped defend one side of the Guatemala elections just a few years ago from accusations of fraud by the opposition, resulting in real political consequences for the country. Michael Saylor, on the other hand, led the creation of what some have called the Orange Checkmark Protocol on top of Bitcoin. This tech stack, which can be found on GitHub, is a privacy-preserving Bitcoin-native decentralized digital identity system. It gained some interest from the Bitcoin community when it was announced a couple of years ago, but it does not appear to have gained any adoption. Finally, and ironically enough, Jameson Lopp, perhaps Lowry's most verbose critic with 3 dedicated articles on the topic, actually implemented a proof-of-work-based spam protection mechanism on his own website for a submission form which, according to Lopp, works well. So if even he can see the use of these old ideas, even if just based on Hashcash, then perhaps we will one day see Bitcoin-like technologies used to secure the networks and data of the world. And that's the end of the article. I like this one because I've always had my own questions about exactly what is Mr. Lowry's modus operandi here, or why did he write this book, and who is he writing it to? And I think Juan actually has a pretty good take on it when he basically says he was inspired by the technology behind Bitcoin, but essentially wrote the book to kiss Bitcoiners' asses. And that sounds harsh, and I don't want to be that harsh on Jason. He's already gotten more than his fair share of shit about that book, and I'm not going to pile on. But Juan's got a point. And I've never really understood how exactly you would use Bitcoin to do what? Secure nuclear codes? To transmit battle plans across a battlefield? You know, because that's a lot of information. And we automatically start, what's not said directly in the article is, how are you not going to bloat the Bitcoin blockchain? Because otherwise you got to build your own network. And what are you going to offer people to run the decentralized servers that keep it secure, i.e. the miners? I mean, if you have your own blockchain, sure, you can put whatever the hell you want on it. And it's just for military. Let's just say it's just for U.S. military use. Well, who's going to mine that? And what are you going to give them for that? Because they got to purchase electricity. They got to set up infrastructure. Unless the military itself just does it all by itself, and then it's not really decentralized. And the protections become lost. Because if something gets jacked up at the centralized core of the U.S. military, like, say a coup or something like that, or just a huge breach of security, you got a major problem. And you can't really use the Bitcoin system. Because what you want to secure, I guarantee, is going to bloat the Bitcoin blockchain. And I'll bet you there's going to be a bunch of people that say, no, we're not going to do that. And then you'd have to fork Bitcoin. And real Bitcoin would go on its merry way. And then you'd have, Bitcoin.mil or something. And again, the question falls back, well, who's going to secure that particular fork? And the answer is probably nobody. And that's where I had, it just seems that no matter how much I would like to like Jason Lowry's book, it just seems that at all points it ends up in a dead end. And the reason is this: Bitcoin is money. Its entire backbone, its infrastructure, its user base, its developer base, everything about it is geared for one thing and one thing only: money. And every single time somebody tries to piggyback something on top of that, it doesn't work very well. Hell, I just read earlier today that ORDI, which was a company specifically around Bitcoin ordinals, after 3 years, they're going out of business because nobody gives a shit about ordinals anymore. We told you it was going to be a fad, and it's a fad. You can't just say, I'm going to use Bitcoin security. There's just no real way to do that. So, I mean, I don't have it in for Mr. Lowry by any stretch of the imagination, but I just think the whole software book ends up in a gigantic dead end. But don't let yourself become a dead end. 3 have been indicted over brazen crypto wrench attack spree in California. It's not France. It ain't Europe. It's not the UK. No. Here in the States, in the great state of California, if it could be called that any longer, we've got Stephen Graves writing this one for Decrypt. 3 Tennessee men have been federally indicted on robbery, kidnapping, and conspiracy related to an alleged multi-million-dollar cryptocurrency theft operation targeting victims across California. According to a press release from the U.S. Department of Justice, Elijah Armstrong, Nino Chindava, and Jaden Rucker traveled from Tennessee all the way across the United States to California and posed as delivery persons to gain access to victims' residences in San Francisco, San Jose, Sunnyvale, and Los Angeles. Pausing to say this is the exact same MO as the guys in France, which I've been telling you about for a long time. So 2 things are possible here. One is they're part of the same crew that's operating in France, and that French crew is starting to, I don't know, what would expand. Or they're using that crew, the French crew, as a model of how to operate here in the United States. Probably one of those 2 is true. Okay, continuing. Prosecutors said the men used firearms, duct tape, and zip ties to assault their victims, binding and restraining them to forced disclosure of cryptocurrency information. In one November incident, a San Francisco victim expecting a package was approached by a robber carrying a white box at his Mission Dolores neighborhood home. The victim was allegedly bound with duct tape, pistol whipped, and threatened before forced to transfer $10 million in Bitcoin and $3 million in Ethereum. Another incident cited by prosecutors saw a victim robbed of $6.5 million in cryptocurrency at gunpoint. Armstrong and Rucker were arrested in Los Angeles on December 31st, 2025, while Chindava was arrested in Sunnyvale on December 22nd, 2025, and the charges carry a maximum sentence ranging from 20 years for robbery and attempted kidnapping accounts to life in prison for conspiracy to commit kidnapping, along with fines of $250,000 for each count of conspiracy to commit Hobbs Act robbery and conspiracy to commit kidnapping. The alleged scheme drew strong condemnation from federal prosecutors and law enforcement who characterized it as both sophisticated and dangerous. Quote, these individuals, as alleged, terrorized their victims in hopes of stealing vast sums of money. The scheme was not only sophisticated, it was brazen, violent, and dangerous. End quote. FBI acting special agent in charge Matt Cobo called the alleged conspiracy a calculated scheme, adding that the indictments underscored the FBI's unwavering commitment to protect our communities from violent and organized criminal activity. And the Tennessee case reflects a broader surge in physical attacks targeting cryptocurrency holders, commonly known as wrench attacks in the industry. And then they rehash all of the statistics out of Europe and France and a couple of other places, which I did either yesterday or on Friday, and we don't need to rehash it. It's just that it's starting to really, it's coming to the United States, but it's wearing the same clothes as the French and European wrench attacks, where they're posing as delivery drivers. And this really sucks because most people nowadays get multiple deliveries a month. which means what? You're desensitized to delivery people. They're everywhere. They're freaking everywhere. Hell, all you got, there's an entire Amazon, there's an Amazon fulfillment center close to where I live. They just built it like last year or something like that. And it just went into operation a few months back. And they don't own a single van that's painted with Amazon logos. They are white panel vans with an orange sign that says delivery driver. Completely nondescript. You would have no idea that it was connected at all to Amazon delivery services. But it is 100% Amazon. It's not a store out or a structure out there that has any kind of Amazon logos on it at all. It's just nondescript. The only reason I know it's Amazon is that I looked it up to figure out what the hell is this thing and what are all these vans. And ever since it opened, I see these nondescript white panel vans driving around with delivery driver sign as a magnetic panel stuck to the side of the van. It's completely nondescript. So generally speaking, nobody's going to spend the time trying to figure out who these people are. I did because I'm a nerd, but whatever. It didn't take that long. Still, FedEx, Amazon, United States Postal Service, nondescript vans running around, and they're everywhere. They're all over the place. We're completely desensitized to delivery drivers. And some of us make the mistake of waiting for our delivery driver at the door because we know they're coming or we're waiting on them because we're so excited to get this package. That's not good. Just let the delivery driver deliver the package. Wait till the delivery driver is gone and look out the peephole or out of the window. Make sure nobody's there and then go get your package, right? Just y'all be careful. I said it was going to get worse. It is getting worse. It's now here in the United States, and it looks a lot like the French attacks. Now, maybe we'll rename it to the French attacks instead of wrench attacks. I mean, hell, it rhymes. Screw it. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.